I'm Eddie Cannell.
And I'm Tom Cannell.
This is the Mortgage Brothers team, everyone, and welcome to our podcast, episode 19. That's right. We keep on going, and today we're going to continue one of the trend. Right now, we've been talking about the Arizona contract, the Binzer, and so the LSUs,
the prequels.
Yeah, there you go. And now we are talking about the HOA addendum. So all of you folks out there with HOAs are looking for homes with HOAs. We're going to be talking about this.
That's right. This is the cherry on top of our contract talking.
That's right.
The contract cherry. Yeah, not everyone has an HOA, but HOAs are very prevalent. Obviously, the newer communities will. They're not for everybody, and they're for quite a few, though.
Yeah.
They serve a great purpose. So why don't we just jump into what are some of the things that the lender looks at? And actually, as I'm saying that, there's not a lot that the lender really looks at from an HOA perspective, unless you get into some of the great master plan communities of the old Del Webb days, where FHA used to run into areas of concern when properties transferred over. There was a preservation fee that used to get kicked to the next buyer. And so lenders would have problems with that. And there's areas and nuances that you need to just call us to ask about because it's tough to keep up. But FHA has worked hard to be able to get their product into some of those big, granddaddy master plans. But other than that, lenders, we really don't. Ed, help me. We really don't look that much.
Well, right. And I think that's why we're going to try to make this, pretty simple. But what we're going to do is, if you're watching on YouTube, we're going to bring up the HOA addendum. Okay, so it's called the HOA Addendum Plan Community Addendum. Now, what we do is we're asking real estate agents to send this along with the contract, and most of them do. Sometimes we don't really even realize there's an HOA until a week into the process. And it's like, oh, there's an HOA addendum. So any real estate agents that are watching, please send the HOA addendum with the contract and counter, because we're going to review it to make sure we are counting the right dues and also the frequency. So if it's quarterly, we always convert for our debt to income ratio. We always convert everything to a monthly figure. So we're just looking through lines 8, really all on the first page of that addendum, 8 through 16. We're looking at really close just for the fees. And remember, you may have an association fee and a master association fee, 2 different fees. That is not very common, but there are some large communities in the valley that will have 2 fees.
And it really isn't that common, but just for someone to understand what it is, it literally is. It's a master kind of umbrella. You could have multiple communities within that grand plan community. So it would be usually a smaller fee of sorts, because most of the fees would be pushed down to the lower associations.
Right.
And we don't see many. I don't think I've seen one in the last 7 months or so.
Yeah, they come across as just it's not so common. So anyway, you will, if you have 2 fees, that's because you have an association fee, an HOA fee, and a master association fees.
Mm-hmm.
And then
and also I wanted to throw something out there: the HOA addendum and the actual monthly number that we need to be looking at from a DTI perspective, a debt to income perspective, shouldn't really be a surprise. So when we are working with borrowers, we're typically, having a budget number, in mind as we do our pre-qual. So we typically wouldn't be working with borrowers issuing pre-quals and then all of a sudden say, oh, look, here's an HOA addendum for $225 a month.
No, you're absolutely right. When we have that conversation and we have borrowers with really tight debt ratios, if you're a borrower of ours, you'll probably hear us say, okay, you're approved up to, and we'll give you a number and say without an HOA.
Right.
Right. And then we'll convert kind of the HOA. If you take away the HOA, if you do have an HOA, your loan amount's going to be reduced by an X amount. So yeah, it's not so much of a surprise.
Right.
And
okay. So What are some of the fees we should be maybe talking about besides the quarterly, annual, or monthly fees?
Well, we're going to go right into the rest. So those are the fees that the borrower is going to pay on either monthly or quarterly, right? And then now to get this transaction done on the home purchase, line 19 through 31 have basically these are the one-time fees. There's a transfer fee. We see almost on every transaction with an HOA, there's a transfer fee. I'm going
to interject. As you say the fees, I'm going to say who typically pays for them.
Yeah.
So on the transfer fee, I'm going to say it's typically buyer or seller. It can go either way. There is no standard.
Yeah, that'll be negotiated on page 3 of this, and then line 20 is the capital improvement fee.
Capital improvement fees, think of them in terms of, large kind of underlying improvements or items within a community. Your parks, the little train track, the pond that needs to get, refilled or replastered or whatever that is for the fishing. So they might have a reserve or something of that nature in order just to have some funds there to fix, the real important things in the association.
Okay. Now, line 22 is going to cover is the prepaid association fee. So when you close a loan with, you're going to see in most cases a prepaid association fee on your closing disclosure. And
so that's typically always paid for by the buyer.
Yeah.
So and that's very, very similar to prepaid taxes and insurance and prepaid interest. They're not costs, they're not fees. They're simply things being paid for by you for you in the future.
All right. And then there's disclosure fees. Okay. If there are disclosure fees, which most cases there are disclosure fees, that's line 24 to 30. You'll see the descriptions there, just covering all the disclosures, but that's paid for by by the seller.
Always by the seller. Correct.
Okay, so that's page 1. Page 2 is just legalese, additional obligations. You've been informed by law and all that's real special stuff. I think that to jump right to page 3, the most important things that we're looking at is line 75. Okay, who's paying for the transfer fees? Because as you said, it's negotiable.
And the reason why we care is probably not as important as you care, because they just affect closing costs. When we do a pre-qual or when we go and we do a borrower worksheet, we typically, don't know all the details of all the closing costs, one of them being the HOA. So as you go in and you make your offer, just be mindful that this really affects you more so because it affects the closing costs. You won't get denied because the transfer fee is too high or too low. If your monthly assessments are too high and affects your debt to income ratio, then there could be an issue. But it's really closing costs matter that you're wanting to pay attention to this.
The capital improvement fees are on line 76. Again, that's negotiable. And line 77 and 78 are basically just saying in this addendum, line 77, the buyers shall pay all prepaid association dues, which we discussed already, and the seller shall pay all disclosure fees.
Awesome. Boy, after covering this, it makes you want to go out and buy a house with an HOA.
That's right. You know what? HOAs, again, serve their purpose. There's a lot of people out there who don't like them. But they definitely, I do think.
I would say if we were to take a vote, the majority of our borrowers like them. I mean, they protect, they preserve the asset, they preserve the community, the neighborhood, they keep the roads clean. They can be a little restrictive, but overall, I think they've definitely served their purpose, which is protecting ultimately the buyer's biggest investment they'll ever make, which is their home.
Yeah, I think everyone is pretty much on either side of the fence, and they have pretty strong feelings for or against. And But anyway, it's always an interesting conversation about HOA. So everyone, I hope that helps. If you need anything, let us know. If you loved it, just hit rewind and listen to it again. That's right. Make sure to subscribe to the YouTube channel, and again, share this with as many people as you can if you like it. Perfect. Time to go home. All right, let's wrap it up. We'll see you. Hey guys, thanks for listening to the Mortgage Brothers Show. Please let us know if you have any questions you'd like us to answer on this podcast. You can email your questions to tom@azmortgagebrothers.com or yours truly at eddie@azmortgagebrothers.com. And be sure to ask us for a free quote on your next mortgage. Tom and I will personally work with you and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917, and 1618695, Equal Housing Lender.